Hello and welcome back to my channel. My name's Paul Betteridge, and in this video I'm going to talk about the perfect ORB setup, which you can see on my screen. Hit minimum 5R, but it would have gone on made 7R, I think, on the day, over 7R. So let's go back to the very basics of this ORB setup, and we start off with the hourly time frame. So as you can see, this is the S&P E-mini futures, and we always start on the hourly, so I'd like to see where our levels are. And we go to the day in question. Let's get rid of that. So as you can see, we had a big gap up on the day. Let's just get my pen drawing tool. We had this big gap up into the post market from the close on Friday, which was a pretty sideways day Friday. Market open 9 AM, and you can see the range. We were sitting inside that range. So what I'm looking for is technically you can treat this as a trending day. We're in an uptrend. We're in a big all-time highs uptrend. We're hitting new highs. We hit new highs on the post market. You can see we hit new all-time highs on yesterday's market as well. So treating it as a trending day. I have 3 rules in my ORB setups. The first rule is on the hourly. I like to see whether we are inside a previous day, like we've been a few times last week. Are we in a ranging market, which we have been for the last month or so, and are we in a trending market, which you can see we were trending over the last few days for sure. So if we're in a trending market, I treat the market slightly differently. I'm looking to put my stop, and I'm looking to hold for the full 3 and 5R. If we're in a ranging market, then I'm going to be very, very cautious, and I'm only going to take profits, and I'm looking to trail my stop as close to the 15-minute pivot as I can. And then if we're in an inside day, then I treat that as a scalping day. So it's very difficult trying to make trades on these inside days. Look, you can see there. Let me just zoom in onto this day. Look at that. How hard of a day is that going to be? Trying to break out and trying to break down would have been quite hard. Look, topping tail, bottom tail, topping tail, bottom tail. So these are scalping days for sure. So let's go back to yesterday. So you can see how it finished yesterday, and what I'm going to do, I'm going to replay back to the start of yesterday, because I want to go through exactly my thoughts on taking these plays, and I'm going to drop down to the 5-minute. So we're now aware that we are in a trending market. We've broken new all-time highs in the post market, a big gap up as well. So my levels for the day would have been a bounce down at the previous high, on Friday's high. So I would be waiting for the market to pull back down there for a bounce, and then I'm looking for a break and retest of pre-market high and pre-market low. Pre-market low would have been against the trend, but I would have used that to fill the gap, and then that will be back into the highs of Friday. I'll be going higher probability traders with the trend, a break and retest of pre-market high long. So that's what that would be my main goal. Looking for a trend continuation play. So let's zoom in and take a look at what we're looking at. This is the opening range of the first 15 minutes. You can see we're inside the previous pre-market range. We are also putting in topping tail, bottom tail, topping tail. It's pretty ugly, and there's no trade. And what I really like to see on an opening range breakout is if the opening range breakout takes out not just the opening range high, but also the previous pre-market high as well. So that's what I'm looking for. So that's basically a 2-for-1 deal. You're getting 2 stacked very important levels. You've got the London high, which is the pre-market high. Look at that double tops. That's a key level to watch for. And then you've got the opening range high as well. That's what you're looking for the first 15 minutes. I'll show you I'm going to go through my exact thoughts when I'm watching for the market to set up. So let's move forward. So we're setting up our opening range. We've got the high, which is that first 5-minute candle. We've got the low, which is that second 5-minute candle. And then when the third candle prints, that's our opening range. That's our 15-minute range. So what I mean by that is we've got our opening range high, we've got our opening range low. What I really like about this opening range is we're really close to the pre-market high, and we're really close to the pre-market low. Like I said previously, that's a 2-for-1 deal on the market. If we can put in a opening range breakdown and we close below both those levels, then that's a stacked level and we've got a higher probability of having a good short. The same for the long. If we can put in an opening range candle outside of pre-market high, that's a 2-for-1 deal. We're definitely going to get over those 2 pivots, and then we've got a higher probability of a decent long trade. Don't forget also we're in an uptrend, so this is the preferred one. This is the not so preferred one because that's against the trend. This is with the trend, so that's a 3-star A+ setup there. So let's just see how we go through the day. We obviously know how the day ended, and I'm watching, and what I'm looking for is volume. I don't really pay too much attention to RSI. So we had our first candle that pushed out of the opening range, but it didn't close above it. So we're waiting for the candle to close above that opening range. That's really important. And we're also looking for increased volume as well. So volume is really important, really, really important, because if you're not looking at volume, then and we're looking at a close above, how do you know we've got support from the buyers? We want to see lots of buying pressure closing that candle, so we know we've got support from the buyers. So let's go to the next candle. We're going to quickly flick through. Okay, so we've had our first close above. Let's look at volume. That's our first close above the opening range. And look, it's a 2-for-1 deal. We've taken out the pre-market high as well. There's one thing I initially don't like. I'll ignore this candle for now. It's the fact we had this big top in tail candle. So we know sellers came and drove that candle back down again. So I'm not a big fan of this candle. We have indecision, we have a bottom tail and a top in tail candle, but also the key area here, this is volume. Not increasing volume, it's decreasing volume. So for me, even if this candle did take out the high, that's not an entry for me. I would probably then wait for it to pull back to the opening range and try and find a buy set up, a bounce off of that opening range high. So that's not a trade, so that's definitely not a trade. Some people take the opening range breakout. You know, maybe you could do that. You would have broken out there, maybe you would have taken a stop. You could have taken it there, but I don't take the breakouts. I'm looking for confirmation, and volume is the most important confirmation. So next candle, to see how this goes. Look at that. So we had no support from buyers, and the sellers came back in, and we had an increase in volume candle, but on selling pressure. So for me, no trade. This is where patience is really important. Patience, patience, patience. So look at that now. Anybody who took the breakout would have stopped out if they had proper stops in place. So that's the reason why you wait for confirmation. So let's keep going. We keep going. So now we're at the midpoint. So again, indecision, the market's going nowhere. It's a horrible market. When it's like this, it's terrible. You don't want to be involved in this. And this is why we always wait for confirmation. Another candle that broke the opening range and the pre-market high. And look at that, if you play fair value gaps and you're looking for a short, you could have shorted that fair value gap and scalped it short. I'm working on a new strategy that involves fair value gaps, but not for this video. So I'm moving on. Look at that, so straight back into that zone. So we are now, sorry, let me just go back one candle. We have now closed above the opening range and we closed above the pre-market high. But here's the kicker. We took out the high of that candle, and you say, well, that's a valid entry. You know, that's your entry. Your stop loss would have been there. But look at this, volume, decreased volume. So that's definitely not a take for me. So this is one of those fake ORB breakouts where a lot of people would have got in, they would have been triggered in, and then big rejection and stopped out on the same candle. So really important that you look at volume. So look at that, reducing volume, big green candle. There was no conviction from the buyers here. So for me, that is not an opening range breakout. Even if you would have got triggered in, that would have been a straight stop out. But again, just by looking at volume, you would have known straight away not to take that entry. So that is not a valid opening range breakout. So that is not. So let's keep going. Let's see if we can find another one. And now you know why it's really important to keep an eye on volume. Volume is really important. Look at that. That's definitely telling you sellers are in control. Increase in pressure from the sellers. Slightly increased selling volume as well. So again, if you're playing fair value gaps, that would have been a great scalp short. New fair value gap created on this candle. We're coming up to 11 AM now. So if you're patient, and this is what I've been trying to work on a lot recently, patience, we would have been in the market now for an hour and a half with no trades. So again, we've got decrease in volume now from the sellers, which means there's not as much conviction from the seller's point of view. And you can see that on the next candle. Look how easy this is. This is really easy. You know, just by looking at 2 key levels. You don't care about indicators, don't care about volume profile, even though it's important. We're just looking at volume and we're looking at price action. And so far, we've had 2 closes above the opening range and pre-market high, and we've had 2 invalid entries. So basically, none of them validated all the rules we watched for. So let's go to the next candle. We're putting in some sort of flag pattern here. You can see putting higher highs and lower highs. So you can see clearly something. It's like I see this as a spring getting ready to load. So something's being wound up. Look at that. We're winding, we're winding, we're winding, we're winding, we're winding, and something's going to snap either to the upside or to the downside. So when I see these patterns, these are ones where I'm sitting there patiently waiting and waiting. Confirmation is king, remember that. Confirmation is king. I like that. I'm going to use that more often. So here we go, we're getting close. Oh, look at this. Opening range breakout on increasing volume. So let's mark our entry. That would be our entry. That would be our stop just there. So a fair value gap below as well. You know, that's another area we can look for pullback. So we've got two particular plays here. We're taking out that fair value gap. We've already been there 3 times. So this is the 2 plays we can look for. We're looking to look for the break of that candle with our stop just there, and then we can look for a breakout of going through. That could be our first target. Could be today's high, followed by then our sticking to our 1, 2, 3, 4, 5 our targets. We're in all-time highs if we take out that area. I think let's just zoom out a bit. All-time highs, yeah, we took out that pivot. So we are in all-time highs if we take out the current high of the day. So remember we talked about this elastic band being wound up. So this is that pattern there. We've broken that candle as well. So that's another confirmation. We've had increased volume. That's another confirmation. I also look at order flow, and I'm looking at cumulative delta divergence. And I like to see cumulative delta divergence going in the same way as increase in volume and in the same way as a price. But that's another video. I don't have that set up on this platform at the moment. So let's go to the next candle. Remember, we are now going to mark our entry. So we're going to go long 1 tick above. My stop is always 1 tick below. I'll just put it on that point there. And we're targeting, I always target 3 and 5R in a trending market. That's my targets. I am working 5R there. That's close to 5R. I'll adjust that when we get closer to it. So that's basically our risk to reward. We're risking 1R to make 3R and 5R. So next candle. Okay, so now we're triggered in. So we are now triggered in on this candle. And this is a valid look at volume as well. We had increase in volume, slightly increase in volume as well, which is good. You can see we've got a slight increase, so that's a valid signal. We do like to see bigger volume pushes, so I'm not overly confident on that particular volume candle, but it's one of our triggers and it's one of our confirmations. Next candle. Okay, so bottom tail. Here is another play. This is what I talk about every day in my live videos. Break and retest of pre-market high. We didn't have it here because it broke it and it didn't retest, it just sold off. We didn't have it here, it broke it and then it sold off. But here we broke the pre-market high, we closed above the pre-market high, so we're looking to it to close in the same direction, and we came back and we retested it. So technically this would be an entry here for a break and retest of pre-market high. It's got to be on a green candle. You can use pre-market high or a few ticks below pre-market low as a stop. So, but I mainly focus on opening range breakouts, and I always love to see what the first 15 minutes, in this case this is almost the first 2 hours of the day, goes. Next candle. So we would have triggered in on that break and retest of pre-market high. If you put your stop on the opening range low, opening range high, that would have been a valid area, depends how you want to do your risk. Okay, so we came back, we retested that pre-market high again, 68.89. We've not put in a new all-time high yet. Okay, so if your pre-market high break and retest was sitting just below pre-market high, then you would have just been stopped out. If you're holding the opening range, you're still in it at the moment. But look at this, we've got increasing volume on the red, so this is a bit of squeaky seat time at the moment. Are we going to stop out our opening range? No, we held on to that opening range. So this is another strategy I use, and this is what I look for. If I miss the opening range breakout, this one here, or I wasn't too impressed in the volume, it doesn't quite trigger, then I wait for the break and retest of the opening range. So that is an entry, and we could have put our entry there, exactly the same place where we entered actually. We could put our stop just there as well. So we've got a slight, probably similar risk to reward than we would have on the opening range, but that's another valid entry there. So let's just carry on. So that's 3 potential plays out of this one move we could have taken. And look at that, increased volume, massive big candle, closing on the high, a new all-time high as well. History in the making. Let's keep going. So we had a smaller red candle, but again, look at that, reduced volume. So I wouldn't, now I've had my squeaky seat time just there. That's the bit where it pulled back. Was it going to stop me out? It didn't. We had confirmation with a big green candle. Now we've had a lower volume candle with a bottom tail candle as well. Notice how we pulled back into that we create that fair value gap. We pulled back into that area. So if you're looking for an entry and you missed it, there's plenty of entries to take further on. Next candle. We're holding that area, and look at the volume. Look at that decrease in volume. So if you were sweating it out thinking, oh no, what am I going to do? Me, if I saw decrease in volume and we're in an uptrend, to me, I would be like lapping up. Maybe this is an area to look for an add. So here we go, we pulled back. Slightly increased volume on a bigger candle. I'm not too fussed about that. Come back down into our break even area. Again, I'm not too fussed. I like seeing lower volume. Look at that. If you compare that to green candles, generally got more volume in the last 3 candles than the red candles. So there's still support from buyers. Green candles back with increased volume. So we know the buyers are in control. The buyers are back. So now you can find your add. You could probably add on this candle, or the break of this candle. I'm quite broken out. Yeah, I do. If I'm adding, I'm looking to add on the same direction candle as the trade I'm in. So if I'm long, I want to add on this green candle. I don't want to add on a red candle, because, you know, why would I want to add going against the trend on a candle that could keep coming down and stop me out as well? Here we go. So that's our add. If you want to take the add, this is a buy setup, a break and retest of all these levels. So we're now in. You could now reduce your target a little bit if you added at that point. And then we've got another red candle, slightly less volume than that green candle, so still not too worried. Let's see what happens next. Okay, we're going sideways for a bit. Not very exciting. Again, I'm going slowly through this because I'm, excuse me, I'm going slowly through this because I'm looking at volume. I want to show you just how important watching volume is. Increased volume as the price puts in a new all-time high. So that's good. We want to see that. RSI is coming up into the overbought, but not quite there yet. So where are we on our risk to reward? Let's just bring this down. We are currently sitting at 1.82, 1.8 R. So you could have taken a bit off at 2R. We were not far from that. Reduced volume candle on a red candle. So that's showing us that there's lack of conviction from the sellers still. Equal amount of volume on a smaller green candle. That's still okay. Equal amount means we've got plenty of buyers coming in, but there's not as big candle, so I'm okay with that. So now we've had equal amount of volume on a bigger red candle. Again, not too fussed about that, because, you know, if I saw a big red candle and a big red candle, then I know we've got sellers are back in control, but buyers are still in control at the moment. So equal amount of volume on a smaller candle, bottom tail, so the buyers are back. And now we've got a bigger red candle. So now I'll be getting a little bit nervous because we've got a slightly bigger candle than the previous candle, and it's a solid red candle coming back down into our break-even area. And we're right down our opening range low. So now I'm thinking we're about to stop out, but we didn't have increase in volume. Let me just zoom in on this area. So notice the volume's not increased, equal amount of volume. So let's see what happens. We didn't stop, look at that. We held that opening range high, and that's why this opening range is critical. It's a brilliant strategy, because we found our entry there. Like I said, I always put my stop a few ticks below these levels. If you had your stop just a few ticks below, you're still holding this break and retest of opening range high. So we're now back. Increased volume from the buyers as well. That's exactly what we want to see. Where we go now? Increase more volume coming in from the buyers. So now the buyers are back in control. So the buyers are in control. Okay, less volume, but we're just grinding up. That's okay. We're still in control. Look at that, new all-time high, increased volume. So we've not shown ending volume yet. We would have, is that our 2R? So that's our 2.01, just over 2R. So if you are a 2R trader, you would have hit target. With a little bit of squeaky seat moments where you've been sitting there waiting, where you thought you were going to stop out and we didn't. So that's 2R, easy 2R. And with confidence of looking at volume bars, we're doing a step-by-step volume bar confirmation because it's really easy just looking at volume, and it just means that you can stay in trades when you would normally stop out and then look back later and say, oh damn, why did I stop out? You know, we are using volume as our confirmation. We saw no confirmation from buyers coming and from sellers coming in that looked like they wanted to take control. We saw a little bit of increased volume there, but that's just in line with the size of the candles. This is classic volume price analysis. So we now got reducing volume on a pullback. Again, I'm not worried about that at all because it's reducing volume on red candles. And now look at this, increased volume on a green candle. Increase in volume on a bottom tail candle. You know, we're holding the highs, the previous highs. We're holding this area. So we're not breaking that area down. So if you looking to trail, then maybe if we can break that 2R area, then we could trail our target, trail our stop. I meant start looking to trail. Once we start taking some profit, we can start trailing to minimize our down risk. Again, we're just going sideways on much reduced volume. There's not much going on at all at the moment, so not too fast. I'll be holding on to this. Reduced volume, indecision candle. Again, we're just accumulating at the moment. If you look at order flow right now, you probably would see lots and lots of accumulation up here because we're just going nowhere. So we're getting below average volume, a small red candle. We're holding this area still. You know, are we going to hit 3R? Here we go. So we're now breaking out of that area with increased volume. That's exactly what you want to see. Increased volume. Are we going to keep continuation? More increased volume on a green candle. More increased volume on another green candle. Look at this. This is great. This is what we want to see. Average volume on an indecision. So let's just trail up our risk to reward. Where are we at the moment? We are now 2.8R. So if you're a 3R trader, we're coming up soon. Holding that area. You know, this is a good opportunity where you just set your trade and walk off and maybe set an auto trail. 3R's just been hit, so 3R easy. You know, look at this, increased volume as well. An easy 3R trade. It took a while, you know, we've been in it since 11:30. The time now is almost 3 p.m. Power hour now. So let's see what happens in power hour. So 3R, you would have been out at 3R. Me, I like to hold 3 and 5R on trending days. So I'm targeting 5R. So let's go up to the 5R area. So I would have taken my 3R profit, 5R. So that's what I'm looking for. So we're currently sitting at that area there. We're around about 3R. So here's a little bit of worry because we had a green candle on less volume, then we had a red candle on higher volume. So maybe I'd be looking to trail at this point. That's if I'm watching now. I might have just set my profit and set my loss and would have walked away. I wouldn't be watching the market this time of day. So we had increasing volume on this selling candle. So now I probably would have been grateful to take that 3R. Now we've got reduced volume on a green candle. So this is not what I like to see, but it's putting in new all-time highs. Increased volume on the breakout. 69,000 is a psychological number. Should you have taken profit there? Maybe. Could have taken a bit more off. So keep an eye on these psychological numbers. Look at that. Boom. 5R. That's a 5R day. And that's increased volume. That volume bar is higher than most of the volume from the market open. So this is probably ending volume potentially. And I would have been out of my trade at that point. So let's see what would have happened last few minutes of the day. We held that area, notice the fair value gap, look at that, that pushed up again, massive amounts of volume. That's more volume now than almost as much as the opening candle. So if you're in a trade, that's a good sign to get out. And what did that get to? 6.45R. Next candle. Oh my god, it's even going higher. So if you're trailing on the 5 minute, you'll be rubbing your hands with glee right now. That is now 7.82R, and you're trailing this 5 minute. And then looks like the end of the move. Look at that for volume, massive amounts of volume. That is definitely ending volume for me. If you're not out, you should be out. And the market's about to close. And look at that, market closed on a high of the day. Is that 4 p.m? 4 p.m. So that's a strong day. That could mean tomorrow, which is now today because I'm filming it the next day, we could see a bit of a push up today maybe. When you see a strong close like that, we might potentially see a bit of a, maybe another trending day today. So there you go. I just wanted to go through step by step looking at volume and price, because volume price analysis is really important. You don't need any indicators, you don't need anything on your screen. I know I've got a few indicators on here, VWAP, moving averages, but this volume profile. But all you need to do for confirmation is using the volume bars and price. And that was an easy 5-hour trade today. And even on the pullbacks, like I said earlier, I was a bit worried because it's pulling back, but we didn't have the massive conviction from the sellers. I wasn't too fussed. Again, that's why you keep your stop losses in place, because if it did stop you out, it stopped you out. But we know the opening range breakout is a key area, because look how we rejected it, and then finally broke through. We bounced once, bounced twice, bounced 3, 4 times. Look at that. And we held that area. So opening 15-minute opening range, in my opinion, is probably the most important range to watch. And that's why I love it so much. And it's been transformational this year for me in my trading. And it's been especially transformational where I've been watching for the daily trends to see whether in an inside day, a ranging day, or whether in a trending day like today we've broken the highs. And look what happens when you get these right. Brilliant day. I do have a guide on my website. It's totally free at the moment, so the link will be in the description. So scroll down, have a look, download that guide. It will be put on a paid structure shortly, so I'll get a lot of good feedback from it. And if you want to support me, you can buy it on the Amazon link as well. It's very cheap, and you get the printed copy sent to you to your home through Amazon. And that's it. I will be back soon with another volume video, and I'm going to talk about volume profile because these are equally important areas. Just a very quick overview. You can see here massive amounts of volume, and you know that's a key area. So if we pull back into these regions like today when the market opens, pull back to that area 68.82, keep an eye on that area for a potential bounce. Put your stop below that volume shelf, and that's a key area of potential support. So thank you for watching. Don't forget to download the free opening range guide. Goes through my exact strategy in all market types, entries and stops, pretty much what I talked about right now. But yesterday was a prime example of how amazing you can make your trades by just looking at volume and the price. And it's really simple. Thank you for watching.